Hello, everyone. Welcome to this week's Market Outlook. If you're new to these, we do them every Wednesday at 12:30, and it's 25 minutes of what's going on in the major markets. So we'll look at indices, crude oil, gold, that sort of thing. For some reason, I'm getting feedback in my ears, so I'm just going to try and switch that off, and then we'll get started properly. Okay, I think there's a lot going on this week. Now we're getting back to normal after summer holidays. We're going to start off looking at oil first of all, because I think it's an interesting market considering what's happened in the last sort of 24 hours or so. But first of all, let's just put the risk warning up. So we look at stock market indices, a couple of the major currencies, gold, oil. We'll take a quick look at Bitcoin as well, because that's been recovering over the last few weeks or so. So we'll take a look at those, and we're really just looking at where the opportunities might be and the levels to watch in the days ahead. Of course, as it's the first week of the month, we've got non-farm payrolls coming out this Friday at 1:30. So we'll do a live webinar ahead of that and over that to see how the market reacts. If you're not familiar with it, it's a pretty big announcement every month. It's the US unemployment numbers, and I think the expectation is for about 185,000 jobs to have been added in the US economy during August. So we'll start that webinar on Friday afternoon at 1:15 and finish it about 1:40. Okay, so if you're subscribed to the YouTube channel, you'll get a notification when we start going live on that. But let's get started. I think that risk warning's been up long enough. Let's just take a look at this. This is oil. So normally we do oil last, but I thought, because of some of the volatility that we've seen in the last 24 hours, I think it's a really interesting market. So just to walk back to where we were, this is the left-hand side of the chart. This is June last year. So this is when oil was trading around about $42 a barrel. Since then, we've seen this significant rise. The price of oil has rallied about $30. So we've seen a 70% rise in the price of oil. And this trend had been doing a pretty good job of keeping the market well underpinned. You know, we'd get sell-offs, but the price would push higher. We can see it here pushing up towards 73 in May. If I start walking this forward, comes back to the trend line and the old support line in May, faffs around, and we have a move out again to fresh highs. So when we were looking at this market back at the beginning of July, it was a trend that was still really strong. But it spent the summer sort of struggling, really, just chopping around. So not really breaking any major levels, but also not making much headway past those previous highs. So let's just jump forward here to where we are now. So what's happened the last 24 hours? We had the move yesterday. Let me just zoom in on this a bit, and then we'll look at the intraday chart, because I think it's interesting what happened. And it's maybe an opportunity. So this move yesterday, where it traded up above $71 earlier on in the day, and then ended the day just above 69, and today it's pushed a bit lower, so it's currently trading at 68.90. And the reason behind this volatility, let's just flip it over to maybe a 10-minute chart while I'm talking. So the reason behind the sort of volatility that we've seen is because storms building in the Gulf of Mexico, in the US. The worry was that potentially, it could affect some of the oil rigs and the oil exploration business down there. So we saw, which could impact clearly the price of oil. If exploration is affected, then clearly it's going to have an impact on supply. But overnight or yesterday, it looked like that storm wasn't going to happen there. So we saw this big reversal in the price of oil, but it has brought us back to what could be, I think, something of an interesting level. So we've seen it move something like, I'm not quite sure my trend line's flicking about there. We've seen it go from up here, from above 71 to trade as low as 68.50 a couple of hours ago. And I think for me, why it's interesting is if you think this move is overdone, and it has spent the last couple of hours trying to recover. But I think what's interesting is really the levels that the price of oil has been knocked down to. So just before it had another move above 70, it spent a fair amount of time sort of trading just above $68 a barrel. And it's come down to about 68.5 earlier on this morning. So I think if you're going to take the view, well, actually, this volatility, this maybe knee-jerk reaction to the storm not happening, this is maybe overdone. I think it's interesting down here that maybe it could be seen as a buying opportunity. You've got the old support left from back here ahead of 68. So we got 24th of August, later on the 24th of August, again on the 28th of August. So $68, there had been an appetite to be a buyer. The price gets lifted $3 higher, helped, of course, with this storm, and it's reversed, and we are seeing a bit of strength coming in. So for me, and is it this afternoon or tomorrow? I think maybe it's tomorrow we have the oil inventories because of the holiday in the US on Monday. And of course the payrolls on Friday will affect it as well. But if you were going to think about being a buyer of oil, this sort of having stopped beyond this $68 level, looks like an interesting one. For fans of the RSIs, this is the most oversold we've been, at least on the hourly chart. You can see it's gone oversold down here, bottom right, on that sell-off below sort of 68.5. This is the most oversold we've been since the 9th of August. So it's getting on for a month on the hourly chart. So I think it's going to be an interesting one to watch to see if sentiment starts to switch around again. It's only yesterday we were at the best levels for 6 or 7 weeks. It's got knocked back almost $3 from those highs from yesterday. And I'm just wondering if maybe we'll see it claw back at least some of those losses in the days ahead. So I think oil is a really interesting one down here. If we just go back to the bigger pictures, that's our short-term point of view. But let's have a look at maybe the bigger picture here. It hasn't, I don't think it's changed that big trend just yet. We have seen that trend line off those lows lost, but we still have just about, for the price of oil, higher highs and higher lows. And I think for me, the really big level are these lows from June. So if we round it down, $63 a barrel, big support middle of June. We saw it sell off to it again the 16th of August. It got as low as 63.80, and the market got lifted $8 up there. So I think it's only if we see oil drop below 63 does it start to look as if maybe that big trend from June last year is finally coming to an end. So for now, at least, it still looks like a buy the dip market. And in the really short term, like I say, the next few days, it'll be interesting to see how this $68 a barrel level performs. But I thought we'd have a look at this first of all, because it is, I think for me, from the stuff I watched during the day, I think it's been quite interesting, the moves in the last 24 hours, such a big turnaround in the price of oil. And I do sort of wonder, has it maybe been overdone a little bit? But an interesting market to watch. Right, let's get back into the normal order of doing things. Let's start off pound US dollar. I think this is interesting as well. It's always interesting, the pound, because there's so much Brexit stuff going on at the moment. This is clearly, I think, the big driver for pound US dollar is the Brexit discussions and progress or lack of progress and all this rumor and stuff that's driving the price. I think what's interesting here, we've seen this massive decline since April of this year, from 143 to as low as 127. So it's more than a 10% slide in a little over, 3 or 4 months. And we did see it was getting really hammered during early August. The first couple of weeks of August hardly had an up day. You can see it here. We've hardly got any green candles going on down here. It's just constantly selling off. And we did have this recovery. We had this recovery from below 127 up as high as sort of 130.5. But again, you can see the last week we just got this procession of red candles again. So for now, I think that the big picture view, the trend that we're looking at here, so the trend going back to May of this year, so the 3.5 month trend for pound US dollar is definitely still down. We need to crack 131, I think, as a minimum to suggest that maybe this weakness is changing. We can start looking for a deeper recovery. So at the moment, I think the risk is for a slip back, to maybe 127. But in the really short term, let's say the next couple of days, I think a bit like oil, if you thought, well, actually, maybe this move is a little bit overdone. I think there's maybe a half decent chance of a rally. And what I'm looking at, this is the hourly chart now. If I just pick up on the level, so if we have a look at this, so the old lows from 24th of August, when the market sold off from 129.5 down towards 127, and then got a rally, a 300-point rally from here. We're back here. It has poked below it in the last few hours or so. These are hourly candlesticks. So we have poked below 128. Sorry, 128 is the level. But I think it's going to be interesting to see, do we see 128 hold and at least some sort of, maybe even if it's just a dead cat bounce, some sort of bounce off these levels. So again, maybe the aggressive short-term trade here, it's going against the trend of the last few months. But maybe the aggressive short-term trade is to be a buyer, but with a stop loss, maybe 27.80, 27.70. I think if we start pushing below these lows from this morning, it does look like that level's broken. But I think it's an interesting one. It's always interesting, the pound, because it has been pretty volatile, clearly, with all the Brexit things going on. Also, looking at the RSI, we're oversold down here. So we're oversold, not surprising, on that sharp move lower. We were oversold back here, 4th of September. Did see something of a bounce. So for me, in the really short term, maybe oil and the pound are the interesting ones to watch. And for the pound, I think it's all about that 128 level. But it doesn't change the bigger picture that it is still weak. Going back to the dailies, this is a market that still really can't hang on to any sort of half decent recoveries. Let's see. So look at the euro. So look at euro dollar. Similar sort of picture. We've seen dollar strength come back a bit over the last week. I think what's been interesting on euro dollar was the size of the recovery. It traded back middle of August to 113, and we hadn't been at 113 since, I think it was June 2017. So we're back to these sort of levels. The market was pretty oversold, the most oversold it'd been for a few months. We saw this recovery and it pushed back into the previous range, pushed back up towards 117, and it's sold off since then. And for me, it needs, if we're going to see a half decent recovery, we really need to be breaking through these old highs, this sideways range it was trapped in for ages. So for me, I think that the pressure is still a bit on the downside for euro dollar until we manage to break above 118.50. But again, like the pound, maybe there's a short-term opportunity, for those of us who like the odd little trade against the trend. We're back down. Let me just zoom this out. So we're back down to these old levels. Where am I looking? So from sort of here on the way up, sort of 23rd of August, maybe even these old lows here, 21st of August, this whole 114.90, 115.30 area had been something of support. So maybe in the short term, we get something of a small bounce to have another look at 117 at euro dollar again, but it doesn't change that bigger picture. So again, I think like the pound and the euro, maybe in the really short term, we see a little squeeze higher, but they're still under pressure, and the US dollar, I think, is still very much strong, I think, against these two. Let's take a look at stock markets. S&P 500, which is the benchmark we use for the US market. So, plenty of people are familiar with the Dow Jones. The Dow Jones is only 30 shares. The S&P 500 is, as its name suggests, 500 shares. We had that breakout during August. So the last week of August, the market broke out to fresh all-time highs. And I think this is a market where if you looked at the way people are trading, more than 50% of people are going to be short. You get markets that have strong trends like this one, like we've had now, just on this chart here for the last 4 or 5 months, and too many people want to bet against the market running out of steam. But it's a market that continues to rise, and the breakout to fresh all-time highs is a positive sign. We are well above that trend line. It could fall 100 points from here, and we'd still be within that trend. So it is overbought in the short term. We did have it overbought up here on the RSI, so it is due some cooling off, but it doesn't change that bigger picture view. And we've got lots of support coming in, 2840, 2800, 2790, and then ultimately this trend line support at 2760. So it would be a braver man than me that bet against this market having a serious sell-off anytime soon. So, and again, I think there are some short-term levels to watch. If we take a look maybe on the hourly chart going into this afternoon. Now, yesterday, I was watching this afternoon. Yesterday, it pulled back to around about 28.85, rallied up 2900, and overnight it's come back down and tested these old lows. So I think this whole 2880 to 2885 area on the S&P is maybe an interesting one to watch for short-term traders for a bounce over the next couple of days. We might see these markets go a little bit quiet, bearing in mind we've got payrolls coming out on Friday. We could see maybe slightly more cautious markets ahead of that announcement. But for me, 2880 to 85 has been big support for the S&P. We'll have a look at the DAX in a minute, the German market, because I think that's another one that's near a really big level. But let's see what happens this afternoon. So let's just flip it back to a daily for now and take a look at the DAX. The DAX is one of our most popular markets with clients, and I think it's understandable because it is an incredibly volatile market. Just in the last 6 days or so, it's gone from, let me just zoom in, it's gone from 12,600 to trading as low as 12,100 this morning. So it's moved 500 points in the last 6 days. So you can see why people like it, because of that volatility. And it really has done its own thing in the last few months. We were looking at the S&P there, the broader US stock market, and you see how that has just clawed its way higher. The DAX has done nothing of the sort. We're stuck in what looks like a pretty broad sideways range at the moment on that market. So not exactly a lot going on there. But I think it's interesting because where it's broaders to now, we're back to levels that had been, if you just zoom this in a couple of steps, that had been really important. If we go back to the June lows at sort of 12,100, the lows here, middle of August, and again a bit later in August, and this is where we are. So I think from a sort of charting and technical analysis point of view, if the market is going to bounce from anywhere, then this is the place. So I think this is why potentially it's an interesting one down here. I think because it has been so weak, I wouldn't necessarily be a buyer just today, but I suppose the aggressive tactic is to be a buyer with a stop under today's low. But we have seen it turn around off these 2-month lows in the past. So I think this whole 12,000 to 12,100 zone is a really interesting one to watch for the DAX. Let's just flip it onto the hourlies and see what we're seeing so far today. And the theory behind support, of course, is pretty simple. A level that has been important in the past, we're going to see if the buyers come back in and if it's important this time round. We have seen, you can see it's something of a bounce over the last couple of hours, but we are only a couple of hours into this, so I wouldn't necessarily be falling over myself to buy it just yet. But I think it is interesting down here to see how it performs. So let's keep an eye on that one and see what happens. So that's the DAX. The big level to watch are these 2-month lows from around about 12,000 to 12,100. If we lose those, then it starts to look as if we're going to target, the lows for the year, just below 11,800. So it is, I think, something of a pivotal point for the DAX down at these levels. We've got a couple more to look at. We'll wrap things up as usual by looking at gold because we started off looking at oil. But before we do that, let's take a look at Bitcoin first of all, because even though so much of the hype and craziness has gone out of this market, nearly all of it, I think, compared to where it was September, October, November last year. So much has gone out of this market, and the volatility has really quietened down. But I think it's still an interesting market. I think if we look at and really it's all about the big level. It's all about how these levels have performed. I think I put a Bitcoin video up on our YouTube channel yesterday, but these old lows around about 5,500 to 6,000 have once again propped up the price of Bitcoin. So and we had seen a pretty good recovery up until today. It's got clobbered, it looks like, in the last 24 hours, but that recovery is still just about going strong. So whenever we see weakness for Bitcoin, sort of 5,500 to 6,000, we do see the buyers come back out. It's got clobbered a bit now. What's going to be interesting is whether we see buyers coming back in again. Is this just a buying opportunity in the face of the bigger recovery that's been going on for the last few weeks or so? So I think it's going to be an interesting market to watch. I don't think we're going to be seeing 20,000 anytime soon in Bitcoin. But I think in the short to medium term, a run back to those old highs from July, around about 8,500, looks completely doable. I think if we were going to assume this recovery is going to continue and this sell-off is just a blip, we got support about 6,800 there. The market's 6,940 at the moment, so I think it'd be interesting to see what happens down at these levels for Bitcoin. And finally, gold. So gold has it's maybe got, it's not, I wouldn't say it's boring, but it's the trend that's been in place off those old highs at 1360 is still very much intact. We saw it as low as 1160 the middle of August. It's had a brief run above 1200, but it sold off again. So maybe this will turn out to be more of a sustainable recovery than we've seen for the last few months. But it needs to break at least this trend line at 1235 to start suggesting that weakness off those highs is really running out of steam. So maybe in the next week or so we'll see another run back up to these old highs, maybe towards 1220, but it doesn't yet change that bigger picture. And the thing that's driving it here, one of the main things, is dollar strength. I think people, even in times of trouble, traditionally gold was seen as a safe haven in times of trouble. I think now the US dollar is seen as a safe haven. When we saw the Turkish lira crisis going on and all of that, it was the dollar that was going up, not the price of gold. The price of gold was still sliding. So still a bit weak, still quite weak. And some obvious levels there if it's going to break out of that trend. We'll start wrapping things up there, but I think, like I say, the interesting market to watch, I think the next couple of days, maybe this afternoon, is the price of oil, because it has reversed so sharply off those highs from yesterday, above $71. 68 has been big support. Are we going to see another recovery from here? So I think that's interesting. And the other one, which is always interesting anyway, pound US dollar. Down at these levels, down at 128, because 128 has been big support in the past. Is it going to be the case again? And are we going to see a run back up to maybe at least 129, 129.30? But like I say, it could be an odd couple of days because it's the payrolls on Friday. So the unemployment numbers come out Friday. We'll do another webinar then to see how the market reacts to that. But for this week's market outlook, we'll start wrapping it up. As usual, if you have any questions, you can drop me an email, david.jones@capital.com. You can follow me on Twitter for tweets about charts and big levels and that sort of stuff. And to find out more about the company, open an account, try a demo, see what markets we cover, all of that, just go to the website, www.capital.com. But for this week, thanks for coming along. We'll wrap it up there. And if you're around on Friday, we'll do that payrolls webinar at 1:15 UK time.